Hi and welcome to StockInvest.us podcast for week 38. I hope you took my advice about stop loss because last week that was a really dreadful week. Nasdaq down more than 5%. And that means that several stocks fell much more than just 5%. That's the whole point of stop loss. Try to reduce your losses. And my tip for a green week, well, that really failed, which means that also my trading tips for the week fell. It's the first week since week 20 where all trading tips actually went in red. They were somewhat saved by stop loss. That's the point of stop loss, but we will get back to that. First, as always, I'll try to give you the insights. What do I think about the week ahead of us? Some say it might be the worst week ever. I'm not sure about that, but we will have a look. And of course, we will see if there's any trading that can be done this week. First, and as usual, we have to listen to the disclaimer, and then I will be back with this week's insights.
Hello, everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
I would like to start this section of this podcast by saying that I'm sorry. I'm sorry I was wrong last week. I'm sorry for those who lost money. Because in last week's podcast I said I thought this could be the last green week. And I argued why, and I said that the main thing, the only big thing last week was the Tuesday and the consumer price index numbers. I took a personal bet that the consumer price index would come in around consensus, which was 8.1% 12 months over 12 months, meaning that the prices were going up 8.1% over last 12 months. Instead, they came in at 8.3, and that really scared the market, and it took a fall. As I argued in the podcast, everything was building up to a place where it could turn. That I was afraid there was not enough momentum. I thought maybe it would hold a week. But with that inflation number, the market starting to fall, the worst case scenario came in. And then we suddenly are where I thought we would be, but not last week. I thought it could be this week and the forthcoming weeks that we were exactly where things are now. We are breaking down on that positive trend that was just a few weeks ago. And that usually means that things will get worse. And to make worse, there are things happening this week. One major thing is Wednesday, when the Fed will release news about the interest hikes. And everyone thinks that they now will use the big drum and go for 1% increase. I will not speculate too much, only say that Wednesday will be very important, but we are in a situation where the market is in general very negative. And if you read the news, and you should read as much news as you can, sometimes you should just scan the headlines, because even headlines sometimes will give you an idea. It's just to get that wide range of information, not only one source, but a wide range of information, to get a little input, and you can see what's happening around the world. In this podcast, I've been focusing on the major lines. I told you about the upcoming war in Ukraine. Sadly, it happened. I told you about the forthcoming conflict in Taiwan. I told you about the inflation, how it will plague us. And as you know, it's plaguing us. And I told you that now employment rate will increase. And now you can read everywhere, everyone is saying the same thing. that we are heading for a recession. As I told you a long time ago, we are heading for a recession. The result will be a heavy increase in unemployment rate and in general a hard market. And the manager of the Norwegian oil fund, Mr. Tangen, he said in a meeting recently that there will be hard times in the stock market. He was asked the question where to invest money now, and he said that perhaps you should invest more into your time together with family. It would be a better investment than doing stocks, yields, bonds, whatever it is, because we are heading for really tough times. All of this I mentioned a million times, the upcoming energy crisis during the winter, but I also said to you that this gives some opportunities. And in this podcast, we will not try to be depressive, we try to be realistic, because that enables us to better understand where we can put the money. And as I told you, in energy there will be less risk. That was, for instance, why Occidental last week, why we've been into several oil stocks, and why I personally also are in the energy sector, because the risk, if the markets start to turn like it did last week, the losses should be less in these markets, and some of them even pay a very nice dividend. So if we accept the situation, we are in a market where it will be hard to make money, but it's not impossible. And before I conclude a little bit about the week ahead of us, this is the first stock tip of the day, trading tips of the day. When we are in the red market, you have to be disciplined. Just hold your horses. When things go crazy, when market fall too much, you can argue that you will have 3 days of fall, then a green day. There are some patterns to these things, but in general, when you have that feeling that it's way too much, it's like 3-4% down on Nasdaq in a single day, you can rest assured that it's a high chance that it will go up. Personally, I use a few indicators. I love relative strength index, because if that one is very, very oversold, it's just a matter of time before things usually pop up. So in a market like this, and that is trading tips number 1, try to use relative strength index to your advantage. Do not buy a random stock. Check your stock before buying it. How is the relative strength index? Is it offering a very good opportunity? You can find the relative strength index on many pages. Of course, I prefer if you go to StockInvest.us or a webpage, and we try to make this visually very easy for you to understand. You will see some chart under the main chart. That's the RSI line. In addition to this, it's colored in the chart. So we color the price line red if the market or the stock is overbought, and if it's oversold, meaning that it's way too down, will be colored green. And usually this strategy works very well in markets like this. So trading tips: hold your horses, use relative strength index. And I will get back to a few more during the podcast. But the week ahead of us, so what are the main things? The main things are, as I said, Fed on Wednesday, the interest rate hikes, because hope is usually the last thing that dies, and most people will take it, I assume, will take it as positive if the interest rates will not be increased as hard as many things. If Fed for some reason go lower, we could very well have a good situation. But until Friday, we'll probably have a uncertain market, trying to figure out what will be the path after Wednesday. Should you invest until Wednesday, or wait till after Wednesday to get in? Again, hold your horses. Maybe it's the best thing to be a little careful, not to sit well or too much exposure when Wednesday comes, because market, as I said, can react very hard, can start long before that. Other than that, we know Ukraine had a very nice progress in the war against Russia, which is a good thing, but that also causes a few things to happen. It forces Russia to be more determined. So I will not be surprised if we any day now can have some very negative news from Ukraine again, which can spear more fear into the markets in general. Taiwan and conflict around China is currently silent. There is nothing saying that there will be anything major happen this week. As I said before, I think these things will be a bit later this year before they really start to come on the radar. So hopefully, except the Fed, it will be a quiet week. There is a few quarter results coming on. I think it's Tesco will be this week, but nothing majorly important. The other things that we like to look at to give a determination about the week is the oil, and the oil fell $2 last week, currently trading around 84. But as I said, that still means oil companies are raking in money, because in average the companies spend around from $20 to $40 producing a barrel. Depends where they are and what kind of equipment they have. And the very best, some of these old fields in Norway, they produce around $10-14 per barrel, and even less if we go to Saudi Arabia and other countries. So oil companies are still raking in money. So that trading tip still remain open. Energy is a place where you like to be. The huge disappointment last week is not such a big disappointment because it's somewhat expected. Is gold. Gold fell by $60 to $1,670. And I said I thought gold now again will start to move upwards. I might have to reconsider that. The thing about gold is, as interest rates increases, gold usually correlate downwards. I am betting on the situation where things are getting so uncertain about the economy that money will flow to gold. That is my bet. That is why I'm saying gold will go to 2,500, because it will be the one place where people can feel a little secure. Personally, I've done that myself. I'm into gold. And it has held somewhat okay during all this time. But of course, I would like to see gold go up, but I wouldn't bet on it right now. 10-year treasury yield, the one number that you should following, is just going up. Currently 3.45, up 3, almost 4% last week. And interest rates, you can expect them just to continue upwards, because as I said, the only way to fight inflation is increasing the interest rates. And that we will soon have a look at the charts, at the technical part of it. That is one of the things that will dampen the market. But to give you that big picture, what you have to understand is that the stock market always turns before the general markets does. The question is, how long, how deep will this recession be? I promised last week that I will start to think about these things. It's trying to figure out a lot of things, put them together, and see some sort of outcome. I'm still not there where I can tell you my good, solid, well-argued opinion in this matter. Because I really need to think harder, trying to see what we see forward. And that is stock lesson number 2. Try to think ahead. What are the things that you can expect forward? Because that will enable you to pick your stocks better. If you believe that the salmon industry is the one growing sector in the world, of course you want to buy salmon industries. If you believe, like I do, that we will head for an extremely terrible winter in terms of energy, well, energy stocks is where you want to be. If you think that the stock market will fall, like I do, why in God's name would you invest all your money in the stock market? So that's exactly what I do. For instance, I only have a small portion of my capital invested in the stock market, simply because I think the long term is still negative. At some point I will increase, and we will get to the trading tips, because last week I said I thought it could be the last good week, so I went a little over the top and I had to pay the price for it. Too much exposure last week caused for a fall in the trading portfolio, but we will get there. Now it's time to wrap it up with the technical signals, and at StockInvest.us we analyze a huge amount of stocks, 38,000 if I'm not wrong, 26,000 of these are qualified for analysis. And based on this we can tell something about how many buy signals is there across the world. Right now it is only 20, and what does the 20 mean? Is that a good number? Is it a bad number? It means that most people, most stocks issue a sell signal. We know that when that number is too high, when the number of sell signals is too high, the number of buy signals is too low, you usually have a buying opportunity, because that's where things turn. We have to go quite much back to get down to 20, and usually around these levels it signals a buying opportunity. At the same time, this is also where things can fall much farther, much faster. And as I just said to you, we are breaking the rising trends, and when you break a rising trend, usually you then have a huge fall. So we are in a situation where the technical picture say it's a huge chance that we will have a very volatile week, which can be very negative. We will have a look at the Nasdaq chart in just a minute. But let's do a few more of them. If we look at Nasdaq, we can see only 10% buy signal. That is extremely low. It tells me there is a lot of bouncing opportunities, meaning stocks that is way too oversold that will bounce up. And that brings me to that stock pick tip number 1. Look for relative strength index, look for stocks that is way oversold, because usually they now represent a short-term buying opportunity. And by short-term, I mean even just a few hours. Could be a day, could be 2 days. But in general, in this negative market, we are not talking about a week or 2 or 3. Then we need more solid things. So pick them up using relative strength index. It's one of the easiest. There is many other indicators, but it's one of these really easy indicators to understand. You can go to the blog.stockinvest.us and read a little bit more about the relative strength index. We have a few articles about the subject that will give you a little insight, quick, easy reading, I would say. And that's the tip, that you pick up some of these stocks that are oversold in for just a few hours for the quick gains. And you may ask, so what kind of stop loss should I use? Well, when you are trading these quick gains, you may not even have stop loss in that way, because you are just hunting the natural percentage. Of course, you should have a baseline where you will sell your tips, but in general, you spend your time in front of the computer, you buy the stock because it's oversold, you sit glued to the computer, you follow the movements, and when you feel comfortable about when to get out, you sell it. There are a few techniques that you can use to try to find that sweet spot when to go out. And I would usually say that when the intraday relative strength index is high, you should go out. Or if to make it easy for you, let's say you have a stock which is currently trading at $75, it's very oversold. We know that there is a psychological resistance around 80. So in a simple case like this, if I got in at 75, I would usually then sell just around 80 if it's hitting up at 79, 80, because that's quite many percentages up. And there should be many of these cases as we move forward during this week. But in general, you have to be careful. And as I said, now for third time, hold your horses, be patient, quick in and out. And you do not hunt for major percentages. You should be happy with 2 to 4%. So greed will be your enemy. Don't be too greedy. Be happy. A good trade is a trade that gives you more than you put in. So I would say 1% is a good trade. And of course, we can hope to do those major scores where you do really good. But in a market like this, I would not bet too much on that, because usually you will fail. You might be lucky on 1, but you will be unlucky on the next 5, and overall will be negative. We are here to reduce your losses, increase your gains, so we play a bit more safe. Nasdaq Nasdaq, as I said, at 10% buy signals, even New York Stock Exchange at 10% buy signals, London 16 and Tokyo 28, and Shenzhen China, which was very high many weeks ago. Maybe I think it will be podcast week 33 where I said that China should have a huge fall, that China may lead up, that we'll see China start to fall before Europe would start to fall, because China was up at 50% buy signals for quite a long time, 46.50, and that was way too high, and now it is really crashing. Only 9% buy signals in China right now on the Shenzhen exchange, and that is extremely low. As I said, these things indicate a possible buying opportunity, but we will have a quick look at the chart because that will give you a better idea. And when saying having a quick look, if you are listening to this podcast on Apple, Anchor, wherever you are, this podcast is also available on YouTube. Usually it comes out a few hours after released. In audio version it comes out on YouTube, where you can see me, you can see the charts, and you can see a little bit more information. I recommend you to check it out because it's a little easier to explain things, also showing it visually. But I'll try not to forget you that listen to this on audio devices and describe what I see. And what we see is Nasdaq is within a rising trend. It was a very good rising trend for a few weeks. Now it is pushing to that very lower end of the trend. Has issued a sell signals from the long-term moving average and the short-term moving average, also referred to as a death cross, not a death star, but a death cross. Last time, if you go back to July 19, there was a buy cross from the relation between the moving averages, giving a very nice rise from around, let's say, 11,000 points all the way up to 13,000 points. So it gave a 2,000 point gain on the upturn. Now it's issuing a sell cross, and markets are falling. And what worries me is that the trend, this trend in this chart, is not the best trend I ever saw, because it should be a little bit more up, but it was broken very significant last week, and that means that there is some support below. And if we rewind many podcast backs, I told you the most important thing now is to turn above 10,600. We had a nice upturn to 13,000. It fell back. It turned up above 11,600. Everything was moving in the right direction, and it started to push upwards, which we wanted. And now we have broken down below 11,600. So we have broken below that previous support levels. And that is one of the things that you do not want to see, because you want the bottoms to be higher than the previous bottoms. That signal better chances for a strong market ahead of us. When it breaks down like this, usually it will continue. And even the top, you can argue that there was a top at 13,000 and last week made a top at 12,200. So where will the next top be? My big fear now is that we will fall very rapidly to 10,600. If 10,600 is broken, you can just expect Nasdaq to fall very hard, very fast in a last panic rally. I think that will happen. And again, if you go back to this podcast series, you will find that podcast where I raised the question Nasdaq to 8,000, but I argue why I think that the end and the bottom will be somewhere around 8,000 points. But we are not going there this week. It will be a much longer process than that. But we are in a situation where things are very negative. The positive things, just to mention these things, because we can be surprised. Last week we were surprised. Let's say that the Fed flips their opinion on Wednesday and only go for 0.5%. Not to scare market too much. You can have that opposite reaction where things really go fast upwards. So things may very well happen. Relative strength index is very low. It's 35. It's not oversold, but it is very low compared to where it usually is. Average is usually around 50. Of course, I'm getting overbought if it's above 70. So we are in a situation where the markets are in general low, and that means two things to me. It means increased volatility, and that means rapid movement both up and down, and increased risk. On the other side, it represents a possible opportunity. I'm not sure if the overall market represents an opportunity this week. I will argue for a slow week, red week, that might go both ways. I hope I'm wrong. I hope that this will be a green week, but I will argue for a red week. There are some signs the volume increased much by the end of last week, and that is sometimes a good sign for things to turn when there is a divergence, that the price is going in one direction, in this case the index is going in one direction, and the volume in another direction. That is a divergence, meaning that you can have a forthcoming change. If markets go up, for some reasons turn positive, go up, it will face a lot of resistance up. So it will be the slowest journey ever to get up to 13,000, where nice things can start to happen. Has to be something extraordinary, like really extraordinary, the sudden end of the Ukraine war plus for these things to happen. Other than that, it will be a slow journey where there is a higher chance that the market will remain negative instead of positive. We need these bottoms to be higher. Coming to a conclusion, it became a very long introduction. We will head for the trading tips very soon. I believe that for the week ahead of us, we will face challenges. It will be a very volatile week, much up and down. I believe you can make money if you go for very short term trading, intraday, just for a few hours, pick up those getting too oversold, in and out of stocks. It's not a market where I will try to sit in anything. Of course, there are some stocks energy related that I like to sit in, and I'm still sitting in. As we will get to the trading tips, you will hear that I'm still in some stocks. But in general, it will be much quicker trading view until we find a better direction of the market. Conclusion, summary, I think we are heading for a red week. It could be very brutal. Be prepared. It might be a shock weekend, but at the same time, it can go the opposite way. As I just said, there is oversold, lots and lots of oversold. The amount of buy signals is almost record low. At some point, there will be a buying opportunity, but before it turns, we can fall even more and things can go even faster. So it's that situation where the risk reward is not very attractive. It's there, but not very attractive. You just have to be careful. So that will be it. We will head for this week's trading tips. Should last much shorter, and you will of course hear how did last week go, how much did we go into red. Just stay tuned. I will be there in just a few seconds. We're heading for the last section of trading tips, and as you soon will hear, it was not the best last week. We did a few mistakes, opening too many positions. Of course, that was a mistake. I even mentioned it myself that it could be a mistake, and it really was. But before that, a few things. Been running this podcast for more than 2 years, trying to teach you a little bit about technical analysis, trying to help you reduce your losses and increase your gains. And during this time, I got many followers. Some of you have been with me for more than 2 years. And the point of this podcast is trying to give you something, an insight. First, a little tip. If you're listening to this podcast and you start to dive into the world of technical analysis and you want to go into the depth and you're using our pages, just remember that using the promo code podcast, you'll get 50% discount on our services. Is it worth paying for services in these red times? Well, that's up to you. Trading is not done by pure luck. The best traders, they have a strategy and they have certain things to look at. Some of it you will find on our page. Some of it can help you to enhance your trading. But it's all up to you, because the amount of free services far outweigh the paid services. But there is some extra, and if you want them, use podcast and you will get 50% discount. That was pure commercial for us, for the business, for you. So how can I help you to become a better trader? I cannot keep repeating all the same things as I get new listeners every week. Of course, something is very basic. So I can only recommend one thing. We have opened a comment section at StockInvest, and you can go to your share, and if you then ask a question in the comment section and direct it to me, I will personally try to answer it, and I will try to give you some reasoning behind my answers. That's just a tip. If I can help you try to understand how I think, I might be wrong in many cases, so you shouldn't just listen to me, but I will give my best insights in what I think. Try not to come just with a question like, will this stock go up? Try to spend some time, try to get a good question, because if you get a good question, I will also have a very good time, because for me sometimes it's very interesting to give deep thoughts about what I really think. So try to put some effort into your question. Just remember to direct it to me, and I will get notified by my colleagues that there is questions waiting for me, and I will answer them in the comment section. So just find your ticker. On the ticker you will find a tab saying discussion, if I'm not wrong, and you can there click and ask a question. Of course, I do really understand that you want to know, will it go up and down, but try to put some argument. Why, for instance, why do you think the stock should go up or will fall? And I can say if I agree, why I don't agree, and I can even try to give you some insights. Enough commercial. We are here because of trading tips. How can we make or lose money? And last week we lost money, and last time that happened was in week 20. Other than that, usually the week's been just green. The losses have, the gains have outweighed the losses. We had a few red tickers in between the green, but the green has been far better than the red ones, the losses. So we have more or less made money every single week to some extent. Sometimes very good weeks, sometimes less good weeks, but last week was a loss. And we will start straight off explaining them all. We had a few open trading tips. One tips was from week 34, Zomedica. Zomedica gained a little. It was actually the one stock that gained a little from the last week, but you cannot even use the calculator to figure out how much, because last week it ended at 25 cents, and this week it ended at 25 cents, 25.2 cents. So it was just minor up. But since we got in Zomedica week 34, it was 26.20. It's still in loss, 4.91%. But this is the trading tips. This is one of the stocks which I do not hold a trailing stop loss, because I believe it will go higher up. Held very good last week. I'm happy about that. What about the other? Well, Rogers was open from week 35. $253 was bought at $253. It still hasn't fallen enough to be cut by stop loss, but it's down 1.49% since it was bought in week 35. So still remains open, Zomedica and Rogers, but Rogers took a little loss last week, because as you remember it was green the week before, but not enough to be cut by stop loss. And let's just have a quick stop there. So how does this stop loss work? I run trailing stop loss, meaning that I put the stop loss as the price go up, the stop loss also go up, it doesn't go down. In the case of Rogers went up a little since I bought it, so the stop loss is not 5% under the buying price, it is higher than that. So I'm close to getting cut out of Rogers. We'll see how it will be. It might be today that will be cut, but it will be cut with a minor loss, I would say. Then in week 36, not last week but the week before, we opened 3 trades because I said it was such a good opportunity. I wanted to go into safe stocks that could do somewhat good. Solid stocks, both Apple, Microsoft and Nvidia. And these stocks went very well in week 36, even had a nice day last Monday and then started to fall. But because they had that very good week, all of them were closed in green. They had a loss last week, but since we bought them in week 36, they were closed with green. Apple was bought at 154.50, went up, and you have to check yourself. I think it was 150, if not just above 160, way over 160, then started to fall, was cut by trailing stop loss. I had a very high stop loss for Apple, 5%. Usually I do not do that for Apple. I only go for 2-3%, but for some reason I just put 5% on them. And of course, when then Apple folded, it fell all the way and was cut at 156.47, giving me a profit of 1.28%. But I am super happy. Absolutely happy, because if we look at week 35-36 together or 36-37 together, well, it's been negative weeks and still we managed to make profit on Apple. And nobody knows, last week could have been much better. The inflation could have been 8.1% and market could be green all last week. Microsoft bought at 253.75 in week 36, went up, then did the same thing like Apple turned last week, was cut by stop loss at 254.1, giving a profit of 34%, so hardly covering the cost of buying and selling the stock. Now Nvidia was that one that was pushing hard, bought at 133.88 and went up last week and was very nice, up almost 10% up, then started to fall, was cut by stop loss at 138.20, giving 3.23%. so the trades bought in week 36 were all closed in profit. Could have been much more profit, but we do never know how the markets really will go. If I knew, I would be the richest man in the world. But still, week 36, as I said, all trades in week 36 were positive. So last week I also gave 4 trading tips, because I said there is a good chance it would be the last green week before we were heading for green weeks. And I had found 4 candidates which I thought were looking very good. So I had Sumerica, Rogers, Apple, Microsoft, Nvidia open. I gave you 4 additional tips. I said I'm not sure if I will do them all, but I couldn't hold myself. I was not disciplined enough. I went into all 4 of them. Intel I got in on Monday, 25 was looking very good, but as you know, things turned on Tuesday. Was sold with stop loss 30.29, giving a loss of 3%. I did Oxy, which Warren Buffett is also into. I bought at $66, went up, but was taken by falling oil prices and bad market, was cut by stop loss at 64.40, giving 2.42% loss. And you may argue and say, but listen, Jim, you say that the energy is good and it's a place where to be. Why did you then sell Occidental? Why did you put a stop loss on Occidental? And here comes the strategy in, as I've said over and over again. Stop loss will sometimes do the wrong thing. You will have a stock sold and then just to see it go up. I will not be surprised if Occidental goes, and if we look at Occidental in a few weeks, it might be $80. You never know. Same thing with Intel, etc. But looking at a wide range of cases of stocks being bought and sold, you will see that stop loss in average will help you. And if this week get really bad, why would Occidental fall to $60, maybe even less, and you can buy it back cheaper? So stop loss, reduce your losses. It's the best tips I can tell you. Try to reduce your losses. And it is about being disciplined. I put on the stop loss and it just runs. If Occidental go up, well, I'm very happy for the Occidental investors. It might even be pushed up by a final bid by Buffett, who knows? But there is no reasoning why I cannot go into Occidental again. Now it's cheaper than last week, but it was sold, as I said, with a 2.42% loss. Then there were Roblox. I bought the Roblox at 45 straight. Everything was looking good, going very good up. And then market fell, and using 5% stop loss on all of this, it was cut at 44.26, giving a loss of 1.64%. And Triple M, which also looked very good, bought 124.50. I was not able to get a real low on all of any of them. But I thought I was in for a good strike, and if Tuesday went the way I thought it would do, it would really be good. But as the market turned, 3M was sold $120.20, giving a loss of 3.45%. So on average, these four stocks, these four trading tips last week, they fell by 2.8%, somewhere around there in average. Last week was a bust. In total, I fell less than the market, and that is what you want to do. But it was a bust, and hasn't happened since week 20 that all new trading tips actually went in a bust. Last time was week 20, as I said, and we can just quickly look back, because then I also had 3 red tips just for fun. Week 20 I bought Tesla, eBay, Expedia. And all of them did the same thing. Went up in the beginning of the week, then was cut by stop loss. It was a very, very minor loss, but it's that week where all trading tips were red. So it's not a celebration, but anyway, it's been 17 weeks since last time all trading tips were happening. But all of these are sold. They are sold by stop loss right now. Sumerica is open. Roger is open. The rest is sold. Some of them were sold, bought in week 36, sold with profit overall, and week 37 was a total bust. What about this week? Well, I've been speaking for more than half an hour in total about these things. I think it might be a tough week. I told you that now you will go short in and out, but I found 3 stocks which I think might just do okay. And the first one that might do very good is Home Depot. I like the things that I see. It's bouncing up from a huge fall. Fell from 300 down to 270. That's about 10%. Oversold on the relative strength index, bouncing up. I think there is more to be gained, not very much, but there should be a few dollars, so I would try to do this trade. Home Depot, HD. So that's one, and the other one is also a short ticker called ON Semiconductors. And it's just within a very, very nice rising trend. And I think it might just continue. If it goes above 73, it can go even faster. So it just looks somewhat solid. Relative strength index is low. And I think it can just be okay. Very good volume as well. So it should be easy to get in and out. If falling below 65, it can fall very hard. So it's not the best, but I think, and we will just see, I think it might do good. Between Home Depot and on Semiconductor, I think Home Depot might turn out better in very short trading. And then Nvidia. As you know, I went into Nvidia week 36. Did that same argument that it was oversold. I bought it on the oversold argument. I managed to make over 3%. At some point it was up 8%, and it started to fall, was cut by stop loss, giving me 3%. Same scenario now. I like what I see. It's oversold. I think it can bounce up. At least now it's trading around $132 about. I think it can go up to 140. I think you can get in at a nice opening. There is no guarantee, so we are just hoping to get in low when it opens and see if we can do a bounce trade. Best case scenario, it will be up to 150, but I will not even gamble on that. Just a few percentages. NVDA is the ticker for that. We are finally there at the end of the podcast. 3 trading tips for this week. HD on semiconductors and Nvidia. In addition to this, I have Zomedica and Rogers open. Should you buy Zomedica or Rogers? I think Zomedica is a good tip in my opinion. It's penny stock and you should only use a very small portion. You should not put a trailing stop loss. Given the right market, it will struggle as long as it's hard market, but given the right things, it can easily give you 20-40%. I think we've done this many times in Zomedica before. It's a patient game of patience, and I think we will be successful again. We will see if we can net in yet another strong profit on Zomedica. Rogers, I wouldn't do it. I'm in it and I will hold it until it's cut by stop loss, because you never know how the week will be. But in general, HD on and Nvidia, Home Depot on semiconductor and Nvidia are the 3 trading tips for this week. And we are talking very short term. It will probably be in and out, maybe even days, and we will see if next week offers a better opportunity. That is finally it. We are at the end. Remember, podcast if you want that discount. Remember, use the discussion section. If you want to ask me a question, I will try to give you insights, even teach you a little or guide you in the right direction where you can read up more. The most important thing that I can tell you this week is there is more to life than stock trading. Remember friends, remember family. Find good pleasure, because you need that anchor, that solid thing that will help you even in your trading. And if you are that shy person, because many stock traders tend to be a little bit shy and live in their own world, facing the computer every single day as the best friend, reach out a hand. Take your chances. If you can make it in the stock market, you can make it in the friends market as well, and you will find much joy and happiness, because if you are in a situation where markets are tough, you need that solid base. And anyway, if you like it, I will still be back next week and we will talk then.